All right, welcome one, welcome all to another edition of Community Capital Live. Very grateful to have you here today. Very grateful to everyone who tunes into this, whether it's live or whether it's on a recording. We're glad to have you and glad to have you learn along with us about the exciting and really emerging markets of impact investing, of community investing. And, this really Community Capital Live is the show where we get to deep dive into these different topics, and you get to participate and join us live and learn along with us. I'm really excited today because we have Lisa Nutter from the Community Impact from the Community Impact Investments, and we're going to dig in on her fund and how she is impacting her community. But first, I do want to take a quick second to mention our partner or agencies and introduce our panel here for today. So this is a collaboration of several different entities working in the local and impact investing space. We have the Main Street Journal. We also have Neighborhood Economics. We have the Eagle Market Street Development Corporation, and we also have the Mindful Marketplace Show. So as far as our panel goes here for today, we've got Kevin Jones, who is the co-founder of SOCAP and the co-founder of Neighborhood Economics. We have Jasmine Rogers and most likely Stephanie Swepson-Twitty, who will be joining us from the Eagle Market Streets Development Corporation. And I am Joel Skeen, host of the Mindful Marketplace on Biz Radio US. All right, we got all of our introductions and everything set. And so I'm going to get us kicked off by introducing our guest, Lisa Nutter from Community Impact Investments. Lisa, thank you so much for joining us here today.
Thanks so much for having me.
Yeah, so let's kick things off by telling us a little bit about what did you notice, or how did the Community Impact Investments come together? How tell us the story of that.
Well, I think it's a story that's very similar to how a number of funds came together. We're actually highly frustrated practitioners and tri-sector leaders who had been working in communities and with communities to scale effective solutions, largely in the space of community economic development. And we weren't really trying to start a fund. We started doing some practitioner-facing research. Got a small bit of funding from Ford Foundation to really bring folks together to talk about how capital was coming and not coming, how it was showing up and not showing up in local communities. And we thought, okay, we'll digest all this and then we'll just start socializing it and people's behaviors would change. And I had a conversation with someone who's been in impact investing for a long time. He's also a venture capitalist. And so he's like, all those things you're saying are true. It's like the capital isn't meeting the moment. He said, it's impatient, it's inflexible. Folks need different types of resources beyond dollars to scale their work. Like all those things are true. And he said, and so there's also there is no impetus, there's no drive for the sector, for the field to change itself. So if you want a fund to do that, you need to go ahead and start a fund that does that. And so I sort of gulped because I've never started a fund before. But fortunately, I have really good friends and colleagues who have. And of course, what you do when you're starting hard things is you bring all the people you love and have supported you along the way into the mix. And so I think that, so for us, it was really important to really bounce off of that research and what we learned from it to begin to imagine what a fund that would behave differently in the field would look like. And so what we created is called Community Impact Investments. Really simple. We weren't trying to do a fancy name. It's like, let's just say what it's doing. And what the fund is it's a venture philanthropy and impact first fund that partners with local leaders and social entrepreneurs, providing both coaching and capital to scale solutions that address economic mobility. As much as we love a great idea that addresses economic mobility, we're really hyper-focused on solutions that have sort of a systemic or a pathway towards influencing practice and policy. And so it really kind of puts us in a very distinctive niche, I think, in that way. And we get that policy and practices don't sort of just shift in the ether. that largely policy shifts depend on public narratives shifting. And I think particularly in the world of economic mobility, and quote unquote anti-poverty programs, like we know what those toxic narratives are. And so unless we're going to be a part, you have to be a part of trying to shift those narratives if you're really serious about scale and if you're really serious about changing practice and policy. So we also have a very intentional focus on that. So we launched the fund. When we launched Fund One in the height of the pandemic, which was pretty interesting. And but what it helped us understand is sort of in live time, like this is a really distressful moment. If this thing can work in this moment, it can work in any moment. And last year, this is the last year of what we're calling Fund One, and now we're beginning to transition to Fund Two. We are place focused, which means for us, we seek opportunities to strengthen ecosystems and work that already has traction in communities. And we look for what we call solution kinship. And so a really specific example of that is in Philadelphia, where we've done a concentration of our initial investments. We started off, our first investment was in a land acquisition loan fund that a local CDC had lifted up as part of their strategy recently. They had tested it a little bit and said, hey, we think we have something here, because our main thing is unless we can actually compete in the marketplace for land, we can't build affordable housing. So like all bets are off if we can't get access to land. And in a city like Philadelphia, name your big city, access to land is really, really difficult, complex, hard. And so so that became sort of the third leg of their strategy. And what they got to do is an opportunity to actually build out what that fund would look like over the next few years, and what the mix of sort of debt versus grants, all the things you need to think about in terms of financial and business model around a fund like that. And those folks have been very involved for a number of years in land policy issues, community voice in what happens to land here in Philadelphia. And in fact, they were a main organizer here in Philly around a coalition that led to the creation of a land bank here in Philadelphia, which, we can talk about how things actually end up being versus, what you advocate for. But the point is, they had demonstrated power and policy chops in that way. So when we started to think about what's the next reasonable solution to invest in Philly, we didn't have to look very far to another group that was also working on land policy issues, but focused on it differently from a business real estate, commercial real estate perspective, and really working to build community wealth through the acquisition and control of a commercial corridor in Philadelphia. And so those things fit together for us because they were already working together, and because they were already well positioned and are well positioned. So not just they're already in the conversation about community voice in land issues, but also in general land policy issues here. And they also had sort of demonstrated an ability to actually move the needle. And so I just wanted to give that example of perspective when we talk about solution kinship, what we mean. And then the last thing I'll say, and then I'll pause, is that we think about investment in its broadest definition. So we're not, when I use the word investment, I'm not just talking about an investment that generates a financial return. And when I say investment, I'm talking about financial and non-financial resources. I'm talking about all the types of funding we can bring to bear, all the types of funding and resources we can bring to bear to solve problems. And so we've been really fortunate to raise flexible capital that we then can deploy flexibly, and have invested around thus far around $1,043,000 directly into community-based solutions.
Wow. That's incredible. That's an incredible start. I know, because you guys are just getting started. I have one more kind of opening question here, and then I want to open it up to our panel. On your approach here, one overlap that I'm seeing between the work you all are doing and the work being done by our partner organizations, specifically Main Street Journal and Neighborhood Economics, are these two points here where you talk about how you have a people-centered design and a place-focused lens. So I'm wondering if that really lines up really well, like I said, with both the philosophy of most of our partner organizations here. I'm wondering where did that come from for you,
Uh,
and why is that front and
yeah,
center in
yeah.
your approach?
So I am not a finance person. There are people on my team who are, but I'm not. I actually was trained as an urban planner. So for me, what that means is I was trained in a design tradition,
Mhm.
and also I've been trained to understand of everything. And so I've spent most of my career in the community development and community building spaces. And so the power of place, to me, like place is everything. Just as to me, proximate leadership is everything. Like place is everything. And when we think about strategically how we move the needle in communities, I have problems understanding national strategy. Like I don't understand national strategy. I understand national initiative, right, that can
Mm,
support local capacity and local solutions. But at the end of the day, if if we don't have the capacity on the ground to move an agenda, I don't know what we're talking about. And so so for me, a lot of this comes from my own training as an urban planner, and this focus on design. The people-centered part to me is not just part of my training, but to me, it's just obvious. Like, I don't even understand how you would design something for people without asking them what they need. And so, to that point, we took a year and a half to plan. Well, the fund was years in planning, but in terms of like really working hand in hand with folks, what we did was we invited solution leaders who we knew from Charlotte and Philadelphia to bring some of their ideas, solutions that they've been trying to scale for some time, but haven't been able to for whatever reason. And so they became really sort of co-designers with us on the design of community impact investments, because we used their solutions and we listened to what they needed to really build out the design. And so when you ask me that question, I guess part of me wants to say, like, I don't really know any other way of working other than to engage people who actually are going to be the end users of what you're trying to produce, to help you design it.
Thanks. I think that makes perfect sense. I couldn't agree more, especially on the, it makes sense. Like we always talk about, think globally, act locally. And it
Mhm.
sounds like what you're thinking is, yeah, think globally, but invest locally.
Yeah.
So that's great. Yeah, I want to open it up to Kevin, to Jasmine, to anyone else
great.
for their sort of initial questions here. I have some others we can go through as well, but I want to see
Yeah, no,
what's on y'all's
I'd
mind
love
right
to.
now.
Thank you. I'd love to jump in. So you are your fund is a multi-donor donor advice fund on the Impact Assets platform. I'm real familiar with that. We've got some funds that are on the new CataCap platform that we're enabling people to get their money out at $5,000, so making it even more accessible. And I'm seeing this as an incredibly powerful form of capital, this philanthropic investment where the donor has already gotten a deduction, but then the money comes back to be given and invested again. How does this new form of capital, that I think is going to be really part of a wave, enable you to do the patient and deep things that you do, Lisa?
Yeah. So I think that a couple things. One, we've really tried hard to focus on, I mentioned the fit of the capital and the form of it, but also the other part that's important is the velocity. Communities don't care what you call the money. Like we get caught up in the industry about all these labels. Is it this? Is it that? Is it PRI? Is it impact? Like nobody cares.
Right.
They just needed to show up and show up in a form that's usable for them, that really meets their moment, right? And so I
Good
feel
point.
like so to me, the flexibility that a DAF platform provides, it just fits with that notion. And so when we started working with impact assets, I think one of the things that became clearer, because I had no idea what the range of things you could do with DAFSWORD, but you know, on one side it sort of scared me because it reminded me of the Wild Wild West. But on the other hand, it's like, well, you know, in the hands of competent, strategic, thoughtful, intentional people, this is quite you know, a vehicle. And so you know, so for me, thinking about how quickly we've been able to move and deploy funding, because from the moment you know, we initiate a relationship with a solution leader or team, they began to workshop and receive some of our coaching around their solution. We provide a $10,000 planning grant. Now, that's not a lot of money, but it is enough money to signal to them that we respect your time and
Right.
discretionary funding for you to do with what you will. So people have used that funding in a lot of different ways. Some of them have paid themselves to sit at the table during the planning. Some of them have bought additional technical assistance that maybe we didn't have in our cadre. So I think what we try to act like money doesn't matter in communities, that people should just be willing to volunteer, like that's just nonsense. And so I think the DAF's ability to respond quickly, design appropriately, design correctly, is really a really important piece of this. I also
Can you go on? You
Okay.
talked about the speed, but talk about how a DAF's flexibility let you do
Yeah,
things
just
you
going to
wouldn't
that.
be able to do otherwise.
Yep.
Those two things, speed and flexibility.
Yeah, so I was just going to go into that. In terms of the
Oh,
flexibility,
great.
yeah, so all of the donors in our fund have provided general operating, well, I guess core support, general operating support, however it is they term it.
Right.
For us, the flexibility in means flexibility out. So in terms of a DAF, we can deploy the capital in a number of ways. We can do direct grants, which we have done. We can do recoverable grants, which we have done. We can do debt at any interest rate we decide to term, you know, with our solution leaders in our portfolio. And we haven't tested this at all, but my understanding is you could also do, depending on how it's legally written, equity relationships through a DAF. So all of those different things can be done through a DAF. It's not that those things can't be done through traditional philanthropy as well. It's just that institutionally, they're not designed to move fast.
Right.
You know, like the fact that people talk about catalytic capital and then take a year to get money out of their institution to fund catalytic funds, like that to me,
Right.
like we need to think about that.
Right.
And so I know that some of the funders who are with us say, you know, like you can do things, you know, that we can't do because you're around, you know, the folks, and you know, we have confidence in your decision making on the ground.
Right. Right. You know, somebody once said that, you know, the reason foundations don't evolve is that they have no predators. But it's like the DAF is the new mammal, you know, it is really subverting the power of the kind of colonial foundation. I think it's got a lot of potential to subvert the philanthropic power structure.
Yeah, I don't know about all that. What I do know is in the hands of thoughtful, intentional people, it's a powerful tool. And I think that folks who want to work in multi-donor pools, who want to move money quickly, like those are the people who want to learn with us as partners, because we don't have a funder who isn't, like big or small, who doesn't consider themselves a strategic partner with us.
Right.
You know, so
what kind of, do that mean that they have a time commitment? I can help you with this. How do they come through and really be a partner?
I mean, because they're institutional funders, they have to say, okay, this grant. So all of them have provided multi-year grants. So all but one. So basically they'll provide, you know, just as they would within their own, you know, within the parameters of their own institution, you know, 2 to 3 year grant. So the multi-year aspect is very helpful.
Okay, I get it. And so you don't have high net worth individuals in your fund. You have institutional foundations.
We have some high net worth individuals. but not loads. And so I think one of the things we had to decide in Fund One was how much energy do I personally and then bring my colleagues through the pain of begging people for money. How much energy do you want to put into that versus actually executing the model? And so at some point we decided, we haven't met the target we'd hoped for, but we need to get started. And so, and that actually did a couple things, just getting started. Number one, getting started means you're getting started, like you're doing it, right? And you can actually stop talking conceptually about what you're doing, and you can actually show people, look at, this is what I'm talking about when I say X, Y, Z, right?
And when you started, how much money had you brought in?
I think around 2.5 million.
Okay.
Yeah.
And where are you now?
We actually paused there.
Okay.
And so we are going back out like now to start the raise for Fund Two.
Reaching out to foundations again?
Reaching out to a short list of foundations, because the other thing we decided is like this go around, we have a better sense of who's into us, and who's not.
Right.
I'm not going to spend my time or yours if you're not really into this, or if I have to spend too much time explaining to you why local communities need the resources they need. Like, I already know I'm in trouble.
Right.
Honestly, like, I already know I'm in trouble. So I think that what we've tried to do is curate a very select target list this go around, so that we are talking to people who really get what we're doing and want to be with it.
Right. And what's your goal?
So the goal is over the next several years. So we're doing the raise in 2 phases. So we're doing the first phase is our target is 10 million.
Mm-hmm.
And then the second phase is 15 million.
Mm-hmm.
And what we're so.
And as you go out, what my head seems to have disappeared in my square.
Yeah, I was noticing that.
I don't know. I was there a minute ago. I didn't. I may have. I don't know what I did. Anyway, maybe I'll come back. I'm still here. Anyway,
what did you put in that LaCroix?
Yeah, it was just LaCroix. There's some kind of show self view. Let me see.
I don't know. That's not one of my slides.
That slide is actually the picture of what the Catacap platform is that Impact Assets has just come out with that we're on. Anyway, when you go to this select list of foundations, what will you tell them when they say, well, what did your first fund do?
Yeah, so we'll tell them first, remind them what it is we're trying to do in the first place. Like the first, and so, the gap that we're really, let me back up. What was clear in the beginning and remains clear is that, new approaches are needed to scale promising local solutions and move strategically and with velocity to communities. Like, that hasn't changed. We don't believe that because we're now in the universe that we have changed that. So there's still lots of work to do with that, right? At the same time, in terms of the impact that we're focused on, we're looking at this in a few different ways. One, what's the value add for the solution leaders in our portfolio? And they talk about very specifically about number one, having a sanctuary and space to think and plan, and support in that process. And so for many of them, they're not sure whether or not their solution can generate a financial return because they haven't had a chance to think about that.
Right.
So we help them think about that. We help them design that if that makes sense, if it's applicable. We are never suggesting that every solution, particularly in the social sector, should generate a financial return. That's ridiculous, right? And so they also talk about, this is going to sound corny, but they feel very respected in relationship with us because we understand the work. And because of that, we can get sort of get very quickly to helping them unpack the way forward. And
Right.
so, and I say the other piece that they talk about is the ability to leverage our funding. It's a signal to other investors.
Right.
So leverage is another way that we are measuring our impact. And so far, our portfolio, folks in our portfolio have, I'm trying to remember what we're at now. I'm gonna say over 800,000 so far. They've been able to leverage our funding, and so we provide
Wow.
we provide up to $250,000 in catalytic capital. So
Right.
it's not huge, but it's enough to signal to other funders that hey,
Yep.
you'll be interested in this. And then the third way that we are focused on impact is how thinking about how we strengthen the positioning of folks in our portfolio to further impact policy and practice. And so one of the things that we actually invested in last year and continuing this year is with StoryCorps, which has been because we felt like what we needed to do is get the stories told, get them documented. And it was very interesting working with folks, with the solution leaders on this, because initially they were like, oh, they were all ready to pitch. But I don't know if you all are familiar with StoryCorps, but it's a conversation between two people who are doing work together or in some sort of relationship around some, like whatever, but it's a conversation. And so we said, no, you're not pitching. You're going to have a conversation with one another about the work. And we had no idea what we were going to do with these stories. And now it's sort of becoming more clear how these stories can be used, because we brought on board to our comms team someone who's focused on narrative and helping them take these narratives and use them in a way that influences policy and practice very specifically, not just to tell stories. Like, people love stories, but these stories have to, with some intention, be focused on, how do we get to the core of this problem. So as an example, some folks in the solution team that's working on the land acquisition loan fund and provides affordable housing for very low income women and their families, fights always against this narrative that renters are bad for communities, that renters
Right.
are people and renters are bad for communities because they don't own anything. And so these narratives are out in the universe, and if you can say that narrative is part of why we continue to talk about home ownership as the only way forward with respect to economic mobility. And so I think so for us, the work of the past few years, but also getting these stories out, has helped unearth what some of these narratives are, and then how we can begin to think about shifting them. So
Right.
so that's also part of what we're doing, and how we're measuring our impact.
I think my colleague Jasmine has questions on that. So go ahead, Jazz.
Yeah, going back to this piece around public policy, has your local government been supportive with what you've been doing? Have they been involved either at the county or state level?
We've been undercover. I think for us, well, we're not trying to engage local government. We're trying to support the solution teams and leaders in our portfolio to engage local government. We don't see our role as engaging local government directly in that way. And so, at least at this point, the relationship it's really been about supporting our portfolio to do that.
Beautiful. And I also wanted to go back to this like people-centered design concept. I'm curious, through your community engagement, what were some of the things you noticed in your community, or some of the needs that you noticed in your community, and how do you believe that reflects your local landscape?
Yeah. So, I mean, people now, so remember when we were doing this, it was right on the heels of the public murder of George Floyd. So there was a lot of expectation in local communities that money was going to rain. Like, it was going to come down on communities in a positive way, and things were going to happen. People didn't know exactly what was going to happen, but there was a hope, I should say, that things were going to be different. There were a lot of corporate and other commitments being made, but it became pretty clear pretty soon that the funding, that some of those commitments may have been met, but the funding was really staying at the national level and at the level where, and in the circles that the philanthropic and corporate sector, like these were people they already knew and were already funding. So they were
right.
kind of safe bets for them. So people saw that. Like that wasn't wasn't a mystery. And so, but they also felt hopeless isn't the right word. Angry isn't the right word. It was just like, yeah, like that, of course. That was what it was. It was like, is despondent the right word? I don't know. It's just, they were just like, yeah, yes, what, yep, What, like you just clock it, like 10, 9, 8, 7, you know, like you could clock it. And so, so in some ways, communities end up getting what they thought would happen. At the same time, there was still an expectation raised slightly that these issues needed to be paid attention to. And so, so for us, like what that meant for us and the way we got a chance to engage is that we got to engage in an asset framing way, instead of talking about what communities didn't have or what local and community-based leaders didn't have, you know, because you get very quick. If you don't have, you need to get very quick. If you don't have, if you think you don't have, you need to get very, very quickly to what you do have. And I ran a youth development nonprofit here in Philly for many, many years. And I, like every time we sat down to plan, we would say, okay, we already know what we don't have, right? It's like, let's remind ourselves what we do have, because we have more than we think we do. And so the way I think it's impacted us, to get roundabout to your question, the most is how important asset framing is when you walk into a problem, when you walk into a community, when you walk into an organization, because it helps you see things that you would not see ordinarily. I'm not trying to fix communities. I'm trying to support folks on the ground who are fixing their communities. Like I'm very clear what my role is behind the scenes. And I'm very clear that unless I view what they bring to the table as a hard dollar and resource asset, like we're gonna be stuck in that pre-George Floyd conversation. And that doesn't help anybody.
Yeah.
I got two questions for you, and then I want to throw it to, we have at least one coming in from the audience here. One is, you know, you mentioned being that support for the people that are addressing economic mobility in the community and being that support to them through two things. One is capital, and then the other is coaching and ongoing support. And you've also talked about here how that part of that ongoing support really has a lot to do with actionable real-time data and analysis and technical support. I'm curious what that actually means on a day-to-day basis for these community leaders and for these social entrepreneurs that you are supporting.
So from the coaching perspective, so we view the types of things we focus on with respect to coaching are financial and business modeling, and just the range of communications tools that are necessary to document and communicate, you know, your idea and your solution. The other space I told you that we're involved in is actually sort of beyond communications, really talking of, you know, helping people develop narratives that can shape policy. What that looks like for us is sort of being open constantly to what folks need. And so I'll give you a really specific example. One of our solution teams is working on a suite of narrative change tools, and a product called Modifier. And it's something they've been working on for quite some time, invested a lot of their own general operating in. And so working with us, they've been able to really kind of accelerate their process. So, you know, for them, they don't have any particular, none of them are from the business community, they're nonprofit leaders. And so like being able to access actual people who built businesses, social enterprises, has been very helpful to them. So there's sort of an on-call aspect to it. So people have a coach, but there's also sort of an on-call aspect to it, given it's like, oh, you need this, so we'll go get you this. In terms of the actionable data and research, we do have a relationship with a coalition of researchers. And what we've done is we've sort of relaxed on that element of our agenda a bit, because we wanted to give folks time to actually do their thing, so they can begin to unearth what their research needs are and what the gaps are in their research, but also what they want to bring to the table, the types of questions they want to bring to the table. So, there's this balance, and I'm a former organizational development consultant as well in my background. And so, there is this balance between just the right amount of coaching and technical assistance, and then the tips to too much at one time. And so we pull back on this research stuff to just let them do the work, get their footing in how they're scaling their work, to then come back this year actually around those issues.
Yeah, that makes total sense. As someone who both has done some organizational behavior and some urban planning stuff, I feel like I want to keep chatting with you after we finish up here. But the other question that I had, and then I'll kick it over to our audience questions, is about who can participate in the investments on the, kind of the grassroots investors is mostly who I'm talking about. I'm curious if there's a way for people who live within your community and live within the community, whether it's through crowdsourcing or crowdfunding, or it's through another mechanism, if there's any way that those, the investors into this fund can actually be people from the community who are not, wealthy and credited investors. Is that something that you guys have looked into at all, or is that something that people could participate in already?
I'm just quickly say no, and now I'm going to explain. So we're very clear that our role is to bring capital to communities that they can't already access. So for us, what that means largely is national funding that people haven't been able to get their hands on because they're not on national funders' radars. What we want to do, and what we have been doing, is supporting our the folks in our portfolio, their ability to do that. If a community resident wants to fund work, they should be funding that work directly, not through us. So we're not trying to make the already small pie of funding in a community even smaller. We're trying to be additive, if that makes any sense.
Mm-hmm. Yeah, absolutely. And then we had a question come in from our audience here. Thanks, Mark. I hope I'm saying your last name right. Mark Bernsteel. He said, thank you, Lisa, and for the insightful conversation. And then he asked, could you please share more about your approach to building partnerships? What approaches have been the most successful for you?
Partnerships with solution leaders or partnerships with funders, or?
I think both would be worth touching on.
Yeah. Mm-hmm. So, we really lean heavily on our network to, first of all, understand what's happening in communities, to see what solutions and solution leaders might be a good fit for what we're doing. And so I think it starts there, is we have a trusted network already. And so sort of by extension, if someone tells me, hey, you need to look at that particular idea, then I'm going to look at it. And so our partnership network, if you will, really with respect to how we, source ideas now and then in the future, is really very much based on, being able to reach out to other trusted partners in organizations and institutions. And so from the point of view of funder partners, I think that, I mentioned earlier that, we have gotten much better at focusing on people who really get us. And that sounds like a really obvious lesson, but it took us a minute because I think what you're trying to do, and particularly if you're a new fund, which is what we were, you might have the tendency to try to fit in somebody's box. And it was really not until we sort of pulled back and said, we we don't fit into a box. We need to find people who want to cross the lines, who want to play outside the boxes. And so this, I think finding people who are just truly aligned with your values, but also the way you practice is really important. I think that's important in any partnership, be it a marriage or whatever you want to call it, right? And so I think, so that was a big lesson for us. And it, again, seems kind of silly and obvious, but it was a hard one to learn.
Yeah. I have another question that I think would be good to close with, but before we get to that, I do want to open it back up to either Kevin, Jasmine, and if there's, and we do have one coming in from the audience here, so we'll hit that here. Can you, Nicole here is asking from Equal Exchange. Thanks for joining us, Nicole. Equal Exchange is one of the first companies I ever came across that opened me up to getting out of two-pocket thinking. So glad to have you joining us here. So Nicole, do you want to just go ahead and ask your question? You just need to unmute.
Yeah. Yes. Thank you. And super interesting to learn more about this area, which I am not super familiar with. So excuse if this is a pretty basic question, but I'm less familiar with the DAF as a vehicle. And so I was wondering, is there a return for foundations when they do this, or is it more of a charitable donation that they're getting sort of a tax break? Like what's the draw for them?
Yeah. So there's the tax break. At least for the way we have fundraised for Fund 1, and we'll continue to do so for Fund 2, is we've said to folks, some of the solutions in our portfolio may generate a financial return, but you will not see any of it, because the whole idea of the fund is to recycle and upcycle the capital so that we can put it back into the communities. So everyone is signed up for that. It's like, so basically they're giving, for them on their books, it's a grant. It's a charitable gift. I've had very interesting, I say interesting in an interesting way, interesting conversations with impact investors about, so I said, so is it important to you, is the impact investing part important to you in that the return, that there be a financial return, or that you get the financial return? And what's really clear is what's important, at least in their model, is that they get the financial return. Because if they don't get the financial return, it's just a grant. And it's like, and they talk about like just a grant, like just a grant. And so there is this really not cool hierarchy of capital that seems to be happening in this space. It's just not helpful. But to sort of go back directly to your question, it's like, yeah, people basically are giving the money as a grant.
No, it's, I think, really important to have this space where people are talking about that, where it's just a low return, or there's patient capital, or there's just other ways to talk about it. And it just feels like those conversations are so foreign to many people in this world, especially because you're looking for more traditional funding, right? Foundations and otherwise. And it's just such a minuscule amount that's going towards this. So I commend your work highly, and I hope we can be in contact more on the other side, because I think debunking some of these big returns, especially for community investment, we've got to find another way.
We do, and we have to stop talking about impact investing as like the thing that's going to get us out of this. It's like we have to talk about all the types of capital and social capital and non-financial resources that have to come to bear to really build a movement, as well as the mindsets that have. Like there's so much that has to be done. And so for people to get stuck on these labels, to me, is just confusing.
Mm-hmm.
Yeah. Lisa, when you grow, do you still want to be place-based in Philly, or are you going to be a Northeast fund? What will happen if you succeed?
Yeah.
Where will you be?
Yeah. So again, I mentioned we're place focused, which means like we're not wedded to a particular place. We're really looking for opportunities where we can support ecosystems. So I'm from Philly, so I'm here. So it was sort of and I will say, remember I mentioned that we actually had real solution leaders working with us to design the fund. So one of the things we said as we launched was, all right, you all, you were with us in the beginning. So, to honor that relationship, we want to offer you the opportunity to be in the initial cohort. So a number of those folks were from Philadelphia, and so that just sort of was by happenstance that our first 3 investments were actually here. We also have two solution teams who are in what we call our venture studio, which means these ideas are more nascent and need more technical and other types of support, and which we're building around them to bring their ideas to the next stage. And so those 2 ideas actually are taking place in Charlotte. So Charlotte has been a big focus for us because we have relationships there. So we really want to follow the opportunities, but we also don't. So for example, it would be great to continue to work on land policy issues the way
Right.
we've been working on them in Philadelphia and another community or city. Chicago is a really obvious place, for example, for that. So I mean, I can, there are.
That's great.
Yeah. So
Well,
I'm sorry. Go ahead.
well, just that I'm only a couple hours from Charlotte, and then our next big conference will be in Chicago in the spring with MacArthur,
Okay.
our lead partner. So I'm really interested. I want to follow up on a lot of fronts. I think your Charlotte folks should come to our Asheville conference November 12th and 13th. It's entrepreneurship focused. So along with yourself, but that project, this is really, multi-donor DAF platforms, either at the institutional level or at the grassroots level, I think are the next big thing. If you haven't seen it, check out the Catacap platform, which is a real democratized way to get a DAF account at Impact Assets. It's like 1/20th of the standard cost. It's $250. So, and then working with the CDC, you can get money out at $5,000.
Yeah, I would say, I think the other thing about DAFs is, people who are just using these DAFs and I'm not talking about your platform, of course, but people who are just using these DAFs to move money for the tax benefit, like that needs to stop. And I think
it does.
And so I'm not really sure how that gets policed, but what I am hearing more and more though is that folks have moved money to these DAFs with the intention of doing something big, but just haven't got to it. And so I think there are DAFs and people who own these DAFs who are sitting on the sidelines really trying to figure out what to do with that funding. And so that's another opportunity.
Yeah. This is great. We can go on a long time. Joel, why don't you close it out?
Yeah, well, I think the last question that I like to go with kind of goes a little bit along with what Kevin was just asking about, as you grow and what the next step to that really is. You guys have as your main mission to provide local leaders and social entrepreneurs with capital and coaching necessary to scale their solutions. But you have as your overall vision is that you imagine an economically thriving communities that are powered by residents who are benefiting from this prosperity equitably. So I'm curious, when you're thinking about that end goal, and then you're thinking about where you're at today, what's the next leveling up? What's the next kind of big hurdle to overcome that gets you towards that direction?
I think, dang, did I write that? Oh, wow. So long way to go. I say, but this is why we write these vision statements, right? So we can stay focused on them. So Fund 2 is a big deal for us. Fund 1 in a way was sort of, was our soft launch, call it proof. We didn't call it proof of concept, but some people might call it that. Fund 2 will require us to deploy capital in some different ways than we have. And so I think in order to create this model, so for us, the way we get there with communities is that we're not the only one working this way. Like honestly, I would not have started a fund if somebody was doing this the way that we're trying to do it. So I will say, so I guess my point in saying that is that, I'm now uncovering more and more funds who are working this way and who were working this way when we got started. And I would, in terms of us amplifying our impact, I think working in partnership with them. And so I know Katali is a spin down foundation and fund. It's also an impact assets platform. And so kind of working with them, Common Futures, also another important fund focused on community wealth building. And then Blue Meridian, which is working more on a national level, but also focused on scale. is another fund that we would really love to work in partnership with. So I want to say, first off, like, I don't think you achieve an ambitious vision like that without working in partnership with others. And so the other thing I'll say is in terms of this, the way that we're designing Fund 2 is it's sort of this, we're focused on the same things in terms of programming and content and approach. And we are also still going to focus on being grant funded. And this, like, some people think that's crazy and controversial. Like, all I know is because our money has been flexible, I've been able to pass on that flexibility. Like, that's the bottom line, and as long as people want to play with us in that way, we're going to keep doing that. So that'll remain. The financial model for this to work and for it to truly be the evergreen fund, long-term evergreen fund that we wish, it means that we've got to land on a financial model that allows us to do, direct grants, recoverable grants, and grants that generate at least a concessionary financial return. And so what does that balance look like in order for a fund to succeed? Because the other thing we want to say, we want to be saying to people is, you just need to give us money one time. We're not going to come back because we're going to recycle your capital. So to recycle the capital, that means we have to get some back. That also then means that we need solution leaders who have types of solutions where they can return capital. Most of those types of solutions right now are really in the physical development and housing space. And so it really begins, you begin to get very specific about what your portfolio kind of needs to look like from a balance perspective when you make those commitments, right? And so I'm not sure I'm answering your question, but I do believe that, we will, over the course of this year going into the first half of 2025, really begin understanding better how that financial model is playing out. But we also are going to have to rely heavily on our partnership with our solution leaders, as well as other folks who are trying to do similar things to really achieve a vision statement like the one that's on our website.
Yeah.
Absolutely. Well, thank you so much for your time here today.
Thank you,
for
Lisa.
all the audience members that joined us and asked questions. We love that. As check the to get the update on future episodes and to see the archive, you can go to mindfulmarketplaceshow.com. You can also subscribe on YouTube at Mindful Marketplace Show. And again, the archive of the database that we're creating is being assembled for the Main Street Journal and Neighborhood Economics. This has been a partnership of the Mindful Marketplace Show, Neighborhood Economics, Impact Alpha, and the Eagle Market Street Development Corporation. Thank you guys so much for your time today. Make sure to check out Community Impact Investments and check out all of our partner organizations, and make sure to subscribe on Mindful Marketplace Show on YouTube. And until next time, take care of yourselves, take care of someone else, and remember, we are each other.